Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thanks so much for coming on today.
Good afternoon, Devin.
Well, Tuesday morning, the U.S. Labor Department released data on consumer prices in March, showing an increase of 8.5% from a year earlier. This is another 40-year record, the highest inflation since 1981. The increase was led by food and energy. Now, in China, producer prices for March came out this week at 8.3%, which normally we'd see lead to even higher prices for consumers down the road. Tell us about inflation in the U.S., Professor, and the impact potentially of the situation in China.
It is getting more difficult to stabilize global inflation. U.S. inflation surged to a new four-decade high of 8.5% in March from the same month a year earlier. This high inflation is driven by skyrocketing energy and food costs, supply constraints, and strong consumer demand. It is up from the 7th of February. High inflation is the dark side of booming growth as the economy bounces back from COVID-19, powered in part by low interest rate and government stimulus to counter the pandemic's impact. And now the Fed's top policy goal is to reduce inflation. The central bank faces a tough balancing act of tightening monetary policy without damping growth. As you said, Devin, China's high inflation in producer prices becomes another accelerator of global inflation. It looks that the high inflation will stay around with us longer than expected.
Right, and as China deals with the latest outbreaks of the coronavirus, that's going to be a factor too. Looking at the markets, Professor, stocks on Wall Street actually started out higher Tuesday morning when the inflation numbers came out, but in the end they were lower across the board, but by relatively modest amounts. Declines in financials and tech, but gains for energy and utilities. What's the story in the global markets?
U.S. stocks slipped on Tuesday as investors pondered how the Federal Reserve will act to tame inflation, which Tuesday's data showed rising in March at the fastest annual pace in 4 decades. The Dow Jones Industrial Average slipped 0.3%, and the tech-heavy Nasdaq Composite also fell 0.3% on Tuesday. Stocks started the day solidly in the green, but by mid-afternoon, those gains had evaporated. Money managers expect the readings will factor heavily into the Fed rate rise decision at this May meeting, and many anticipate the central bank might increase rate by half percent point. In Asia, Hong Kong's Hang Seng added 0.1%, while in mainland China, the Shanghai Composite dropped 0.8%. Japan's Nikkei 225, in contrast, jumped 1.9%.
Well, interestingly, Korean stocks today were strongly higher. The Kospi by close to 1.9%. Gains for all the biggest companies by market cap. Samsung Electronics, more than 2.5%. LG Energy Solution, almost 5%. Tell us about the domestic market.
Domestic market had a great performance today, and it ended 2 straight days drops today. The benchmark Kospi gained 1.9%, and Kosdaq also rose 1.5% today. Some domestic investors were relieved to see little in the inflation report, suggesting that the price rises will accelerate further in the near future. They reasoned that the annual inflation could cool up as it starts reflecting comparisons with the middle of 2021, when rising prices first became a serious economic concern. It means that inflation data is now indicating perhaps that we were at the peak or near peak of the inflation. Most of the large cap stocks moved higher today. Samsung Electronics gained 2.5%, and SK Hynix also gained 1.8% today. Institutional investors' purchases led today's market rise with 700 billion won net purchase, $1 exchange rate begin to decline from yesterday after 4 straight days rise.
Right, and zooming out a bit here, Professor, a new estimate on the South Korean economy this year puts growth at an even 3%. This is from researchers at ASEAN. And for the wider region, including Southeast Asia, Korea, China, and Japan, they expect growth to be lower than last year at 4.7% because of the war in Ukraine. Tell us about that, Professor, and what you see as the factors that'll drive growth this year or hinder it.
On Tuesday, the Singapore-based international organization ASEAN plus three here means, as you said, Korea, Japan, and China, Macroeconomic Research Office, or AMRO, maintained this 2022 growth outlook for Korea economy at 3%, citing improving private spending despite heightened external economic risk. The AMRO remains unchanged from its January estimate, and it is in the line with the 3% growth estimate by Bank of Korea and IMF. They say that Korean economy has been on a recovery track on the back of robust exports, but it has faced heightened economic uncertainty amid the fast spread of Omicron variant and soaring energy costs caused by the war in Ukraine. Related to the fallout of the Ukraine crisis, AMRO lowered the 2022 growth forecast for ASEAN plus 3 region to 4.7% from its earlier estimate of 4.9%.
Well, finally, Professor, this report on the Korean labor market adding 830,000 people employed in March compared to a year earlier. That's the biggest increase for a March in 20 years. Notably, manufacturing added 100,000 jobs. What do you see in these data, Professor?
The trend of job growth has been expanded every month since March last year amid the economic recovery. According to newly released data from Statistics Office, Korean economy reported job additions for the 13th consecutive month in March. But the job growth slowed from the previous months as employment in in-person services was hit by the upsurge in COVID-19 cases. The number of employed people came to 27.8 million last month, up 831,000 from a year earlier. Actually, the number of employed people grew by the largest for any March since 2002. But the March tally was lower than an annual increase of 1.1 million in January and 1 million in February. But as uncertainties about the virus situation and export remains high, the job market situation could be changed abruptly anytime.
Indeed. Well, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much, Devin.